Let's have a talk about overlays. When you're a direct lender, you have products that you may offer directly through your firm. You may also broker products. So you may use external underwriting and external companies to do or use loan types that you don't have in-house. And whether it's my company or we're using an external company, there's something called overlays. An overlay are rules and regulations that are above and beyond what Freddie Mac or Fannie Mae require. So we have regular guidelines that tell us basic things that we need. That's a mass exaggeration. Lots and lots and lots of things that we need in order to work a mortgage loan properly and to make sure that we are government compliant. But in addition, we may have additional overlays that are protective of our company or the companies that we're working with. An example of that came up today has to do with credit scores. So as an example, if you want to get an FHA loan, you can have a credit score as low as 500, but it requires 10% down, and not every lender that carries FHA loans is willing to do that. You can also do 580 and above with 3.5% down, but again, not every lender is okay doing that. So FHA allows us to have overlays so that we are mitigating our risk. In the case of the Wisconsin Housing Economic Development Authority, the minimum for their FHA product is $640. So depending on your situation, you may need to look around if you're trying to get an FHA loan with that lower credit score. Another example of an overlay are requirements. And I'm going to just show you a couple of things from WHEDA to give you an example of what those requirements might look like. So we have a few different requirements. They'll have an entire chart that will tell you how you can qualify for this loan. And this is the lender matrix. So this is going to look really complicated, but it'll tell you the minimum credit score. And then as you page through some of this, it will also tell you what the maximum or minimum amount that you can make for that product is. So one of the really cool programs that they have is called Easy Close. Easy Close is a 10-year soft second mortgage that's done for your down payment and closing costs. If you qualify for the program, then you can get a large portion and sometimes all of your down payment and closing costs covered in the soft second mortgage. So it's part of your monthly payment instead of having to have all of that money up front. And that works really well for some people, as they may not have saved up money. Particularly, I'm thinking about somebody who just got out of college, for example, and doesn't have any savings, but maybe just got a decent job. And so monthly, they're making enough to buy a home, but they don't have the savings yet.